And happy Friday, everybody. Welcome, welcome, welcome. Hopefully, we've made it through the week. We all have made it through the week, and it's been a heck of a ride this week. It has been really, really a fun week, a busy week, a volatile week. As traders, this is kind of what we hope for, guys. And, we'll see if that continues on. The election is over with. So a lot of that volatility is now subsided quite a bit, but there's still so much activity in the marketplace. The market at all-time highs. The holiday season coming up. The Fed just cut. Are they going to cut again? Interest rates where they are. So it is still definitely going to be a very busy last, call it 6 weeks of the year or so. And I think those of you that are in our rooms and participating in our rooms see that there is just no lack of opportunity out there. And one of the things I want to talk about today, guys, is something, if you're a technician and you follow chart patterns and you believe in some of these theories, then you probably know about the Dow theory. Okay, and I'll be honest with you. For a long time in my career, I had no clue. I knew what it was just from an economic or a financial principle, but I never really followed it. But man, oh man, it is actually been spot on. And it's been spot on for 100 years, 100 plus years. So we're going to go into that and we're going to discuss exactly what it is, how it can impact you, how it can impact the marketplace. Before we do that, though, let's take a look at a couple things here in the market. Okay, we have been really paring down positions this week and over the last week and a half, 2 weeks or so. It's been some really, really great trade, really great opportunity. One position we have on in specific, and I'm going to do a really quick reference to this and a really quick lesson on an iron condor. And we can definitely get into what is an iron condor, in more detail at another time and the ins and outs of it. But for those of you that may not fully understand, may not understand why you put this position on, what you're looking for, what the P&L is all about. An iron condor, and again, I always reference this, there are so many option types of strategies that have weird names to them. Butterfly, condor, iron condor, straddle, strangle, whatever it might be. And the bottom line is, most of these are just combinations of things that you already know, of strategies and positions you already know about. So what is an iron condor? Well, an iron condor is just the combination of a short put spread and a short call spread. Okay, so we look to sell both of those. Okay, and we do that when we look at, there we go. Thank you for posting that there. If anybody wants to download that link or copy that link, there's an in-depth video on what an iron condor is. Okay, but we do that when we are looking for whatever reason for a stock to remain range bound. Okay, we have this position on in Baidu that we just put on yesterday ahead of the Chinese government, Chinese central bank coming out last night and talking about their newest stimulus package. So as you can see here, we have two positions. We are short the 90.87 put spread. We are short the 96.99 call spread. Now, regardless of what happens, there you go, Daniel, much appreciated. And this was on the fly because this was not on the agenda today, but much appreciated. Regardless of what happens, okay, whether the stock goes to 0 or 10,000, the most this could ever be worth is $3. the width of either one of the spreads, the put spread or the call spread. Okay, stock goes to 0, the put spread's worth 3, the call spread's worth nothing. Stock goes to 1,000, the call spread's worth 3, the put spread's worth nothing. So we sold this for $1.50. We collected $1.50. So real quickly, the way that you would look at the break evens is to take the short options and then plus or minus the credit. So on the downside, we look at 90 less our $1.50 credit, our break even on the downside, 88.5. Okay, on the upside, kind of do the opposite here. We take our short option, which is the 96 call, and we add in the $1.50 credit. So our break even to the upside is 97.50. And in this case, knowing that the spread can never be worth more than $3, and we've already collected $1.50, the reward to risk is 1-to-1, because the most we can make is our $1.50 credit. The most we could lose is $1.50, which is the $3 with less the credit. Hopefully everybody understands that. Again, we posted up a link to an Iron Condor video if somebody wants to know more about an Iron Condor. Before I head into the Dow theory, what's going on today? Well, you know what? Market's up again, guys. S&P's up 25 points. The Dow, which was the laggard yesterday. Yesterday, the NASDAQ and the S&P made new records. The Dow was kind of hovering near the flat line all day. The Dow is up about 250 points. And the NASDAQ is the one that's hovering right around the flat line. All right, everybody. Let me bring this into the live stream here. Who's ever heard of the Dow theory? Or if you have you really ever thought about what it means, what significance it has, and why people look at it as being so incredibly relevant? Anybody take a look at that at all? Maybe. Yes, no. Okay. Okay. Well, in any event, the Dow theory is something that's been around for a very, very long time. Okay? And it is a market forecasting tool that has incredibly a huge amount of success in terms of where the market is heading. Okay? Way back when this thing came out, which was like literally 1900, we're talking 125 years ago, Charles Dow, who the Dow is named after, okay, he was actually an editor for the Wall Street Journal. Okay, and back then, everybody was figuring out a way to kind of measure how the markets, how the economy was doing. There was not a lot of reporting on that. There was not a lot of data on that. So what did he do? What did this Charles Dow guy do? Okay, he created a couple indices. Okay, so is this reliable? Yes. Is this focused on primarily the DJTA? We all talk about the DJIA, the Dow Jones Industrials. Okay, but the DJTA is the Dow Jones Transportation. Okay, the Dow Jones Transportation. And it's used to spot trends. Does anybody, another question for everybody. Okay, for those of you that know about the Dow Jones Transportation Index or have heard about it, okay, does anybody know what the original name was for the Dow Jones Transportation Index? Okay, it actually was not that originally. It was called the Dow Jones Rail Index because back in 1900, whatever it was, right? How did things get transported around? By rail. It was all by rail. Okay, so then it, subsequently came into being the Dow Jones Transportation Index. Okay, now that we got that out of the way, what is significant about this Dow theory? Okay, the Dow theory takes a look at, thank you, Mike, for doing that. Okay, John, thank you, 1890s. Okay, so the idea behind this is the transports, they take what the industrials make, right? If you think about those two indices, the industrials are making things and churning things out for the economy, but they got to get somewhere, and it's the transports that take them there. Okay? Well, the theory is that when the two indices make new highs, and it's got to be both of them, that highlights a bull market. On the flip side of that, if the two indices are making new lows, that is a very bearish signal. Okay, so we know that for the last 50 days, maybe 6 months, the Dow Jones Industrial Average, just like the S&P and the NASDAQ, we have seen new high after new high, but the transports have lagged. Okay, the transports were the concern to people in the marketplace, saying, this bull market, it doesn't have legs. We're not going any further because the transports were lagging behind. Okay, now what companies are in the transportation index? There are 20 of them. Just like in the Dow Industrials, there are 30 companies. There are 20 in the transportation index. And I'm not going to read off every one of them. You can see them all here. And happy to put up a link to this presentation today if you want to get all the slides and everything. But you can see it's very light on the rails now, as it, used to be and what it came out with originally. I mean, you still have CSX, and let me look on here. You still have Norfolk Southern and Union Pacific. What are the rest? They're airlines, they're freight companies, UPS, FedEx. You even see Uber on here. Okay, so obviously over time, the index has changed. Just like over time, the Dow Jones Industrials have changed. And in fact, just last week, we got a brand new listing, or two stocks that were added in that have never been added in before. So it's always rotating. Yeah, planes, trains, and automobiles. That's a good one, Bobby. These are always being updated. And you can see the Dow has, lots of different companies from many, many, many different sectors. The biggest one that was just added to the Dow, exactly, John, was NVIDIA. Okay, Intel out, NVIDIA in. Okay, but you can see the Dow is represented by financials and healthcare and tech and restaurants, right? So, we can see that this is a much broader base of companies, not as wide and broad as the S&P is, because that's 500 companies versus 30 here. And that's really one of the reasons why when people look to see market performance, they're really looking at, the S&P more so than the Dow. Now, here's what I want to bring up. It's been 3 years since the transportation index made a new high. What you see right here, is a comparison. On top is the transportation index. On the bottom, that's the Dow Jones Industrial Index. So you can see here, as we've been saying all year long in the Dow, we have seen new high after new high after new high. But literally it took to Wednesday's rally after the election, so 2 days ago, for the transportation index to finally make a new high. Okay, so that is a confirmation for a lot of people that, yes, this market has a lot of room to go to the upside. It is a confirmation of the bull rally. Now, just because it hits there for one day, it doesn't mean that trend is going to hold, is going to continue. Historically, though, it is an excellent indicator, of a continuing market, at least in this case, where they're both making new highs, a continuing trend for a buy signal, in the marketplace. Now, how could this trend be broken? A 3% pullback, which is not a lot, a 3% pullback. And that would be considered that the trend would be broken. So again, if you look historically, and I could have shown, a lot of data. Here's another chart for you guys that showed the two compared over the last 3 years. You can also see here, I put on the bottom that the indices, these guys came out or were concocted back in 1896. That's how old this is. And that's kind of how tried and true the Dow theory is. Any questions on this before we move on? Any question? Let me know if you have anything. How do we trade on this? Are we gonna, just say, okay, we're gonna buy the Dow now, right? Or we're gonna, buy transports? No. In reality, we're not necessarily going to trade off that because we're traders, right? If you were looking for a longer term, maybe an investment, then you know what? That is something that you potentially would look at and say, all right, this trend is intact. So I am going to take a look at that, and maybe you talk to your investment advisor, maybe, whatever it is, and say, okay, if this thing holds, and again, just because it crossed up there for the first day, I would still be a bit cautious of that. But if it holds, maybe it's something you look at and say, wow, there's something to this. And maybe in a retirement portfolio or something, like that, you are looking for a longer term play. Does that make sense to everybody? I hope. So I'm not going to be looking at any of the individual stocks. Again, let me go back to the transportation companies here. I'm not going to be looking at any of the individual stocks. What I would be looking at, though, and when I say looking at those, meaning just to hold, because we're in, supposedly this trend of a bull market right now. That's just not how traders, the way we trade, how we do things. But for people that are really unbelievably technical, following technical analysis, okay, it is a tried and true indicator. It really is. It really, really is, folks. All right. I will get a word up here shortly. I want to go into a little bit of a rapid fire. Okay. If you guys want to put up some stocks that you want to look at right now. Okay, I know, John, I said I'm going to get that up here soon. I will get it up here in another minute or two. I definitely want to get into some of the stocks here first. Okay, John wants to look at Crocs. Let's take a look at those rubber shoes. Okay, here is Crocs. What do we see on Crocs? Stock has gotten really hit since announcing earnings. I'm waiting for the chart to populate here. There we go. You can see that big drawdown here. Where do I see any kind of support here? Honestly, I don't. I don't until we, maybe break 100, maybe even break 90. What I definitely do see is if this thing were to rally back, fill that gap from earnings, get up to that 50, 200-day moving average, I'd be a seller. IWM, which is the ETF for the small caps, for the Russell, okay, that has been on an absolute tear. It has been on an absolute tear. A lot of that because of the election. A lot of that because, people think that with Trump in office now, the manufacturing and the American smaller companies are going to absolutely take hold here. And the IWM, Russell, the small caps, they trailed the big caps for a very, very long time. So what do you do now? We're at an all-time high. We are at an all-time high in the IWM after this most recent rally. And this has been an unbelievable rally. As I stated, I think I stated this yesterday actually as well. I am never a fan of buying into a rally or selling into a sell-off. Okay, I've got to wait. For something to happen here. So for me, I don't know if I wait all the way to see a pullback to the gap and to see if there's a retest of these previous highs that then holds as support. Maybe I don't wait all the way right there, but I can't buy into it at this point right now. I just can't. So I do think that the IWM and the small caps, the Russell, they probably have gotten ahead of themselves on the election move. I honestly think that. Doesn't mean they can't continue to go higher. They absolutely can. But what I am really looking at is for a pullback and then to get back in there. It's a pretty clear picture to me that gap up here, which is right around the 225-ish level or so, which coincides with that previous area of big resistance. It's pretty clear to me that should be some support. So that is what I see in terms of what I would do with IWM. All right, I'm trying to get something working over here. There we go. Finally. Let's get our word of the day up here, guys. You guys know I always like to keep it kind of on topic with what we're talking about, so I don't know if you guys have any guesses of what it might be. Let me get this into the window right now, and I really messed this up today big time. But here we go. Here is our word of the day. Okay, you got a couple minutes. Yeah, patience would be a good one. Okay, you got a couple minutes to get that up there. We'll let it go for a while here. I'll take some more rapid fire while you guys still get that up there. Okay, I know. Let's see. We got SMCI up here. Yeah, Crocs had that death cross. Exactly, Robert. But that was like $25 ago. $25 ago in the stock. Okay, we're going to look at Apple. We're going to look at SMCI. We're going to look at Oracle. Okay, Apple, SMCI, and Oracle. Let's take a look at SMCI first, because this stock, on the accounting irregularities, Ernst & Young leaving representation of the company, this stock has just gotten annihilated. I think that's probably an understatement. And you know what? It's not even a good chart to bring up in here. Let me pull that chart up on my Thinkorswim, guys. I think it's going to be a much cleaner chart. There we go. Much cleaner chart to look at here. Okay. Here we go, SMCI. It broke through on the downside this massive area of volume, which could have lent itself to some support. Now, volatility obviously has skyrocketed because, the company might be in trouble with the feds. It's a tough one. It's a real tough one. I would say at this point here, anything I would do would be a complete guess. Could there be a lot of upside here? There could be. If there wind up not being any charges, or the charges that are out there are because, EY has left them, if they wind up being dismissed, that's down the road, guys. That is a long way away. So to me, this stock, unless there's some material news that comes out, probably just kind of hovers for a while. Okay, Apple. This is really traded in a very, very tight range for a long time. I mean, you've got, 220 to basically 233 or so, and that's going back almost 6 months. That's going back since July, so maybe 4 months. Okay. I would probably still play for not a lot of movement. When I say not a lot of movement, you have a $10 range here. Okay. I would absolutely respect this range. And if you didn't want to do it with an iron condor like what we talked about earlier, I would wait to buy it till we got down a little bit closer to the bottom of the range, maybe down another $5. And I'd probably sell it if we got up to the 235 area or up towards that upper end of the range. Okay, last one. Oracle. Okay, this is like IWM here. Again, I am not a fan of buying into a rally, selling into a big sell-off without there being any sort of technical indicators out there to help guide me. I know Oracle has been on a massive tear. To me, if we get a retreat back here, again, you've got the same situation where you have this gap that also coincides with this previous area of resistance, the previous area of just a ceiling there, that would be a buy area for me. That would definitely be a buy area for me. Okay, guys, here it is again. Last call. All right, Rodney, after we get this last call, that'll be the one I do. I will get to ASML. Let me leave this up here for another 20 seconds. Okay, and then I'll get to ASML, and then we will do the final wheel spin of the week, and I will be back on the floor next week. All right, ASML. ASML had a tough go when they reported earnings. Actually, if I'm not mistaken, they came out early, and there was also a big shortfall. They were announced early. They weren't supposed to be. There was a big shortfall. You can see this massive, went from 870 down to 680. The stock lost basically 25%. And now it's kind of been hovering and putting in a ton of volume. See these big yellow lines here? That is a ton of volume, which means that is a range now that has been accepted by the marketplace. That is a range that has been accepted by the marketplace. I'm trying to go back a little further in time here to see when the last time ASML was down here, look where that next area of support would be. And that is all the way back here, basically 2 years ago, November of 2022. I don't think it's a bad buy here. I wouldn't say that you have a ton of near-term upside. I would probably play this with either a short put spread or a short iron condor that has a bias to the upside, meaning sell more of like an at-the-money put spread and then a further out-of-the-money call spread. That's what I would do there. Okay, the wheel is closed. Before we go to the wheel and spin it, guys, you got to smash that like button. You got to help us out. You got to get the word out there. We are growing and growing and growing and growing. We need more eyes. Okay, we need more eyes on this. Okay, it is time for the wheel. And no, this is never fixed. We have had a winner, the same winner, 2 days in a row. Leif, if you win today for the trifecta, if you get the three-peat, I don't know what I'll do. We'd have to do something really, really special for you. We haven't seen a three-peat winner yet. All right. Let's get a drum beat here. Got a new one coming on. I just want to turn up my volume. Maybe everybody can hear it. There we go. All right. The wheel is in motion. The wheel is in motion. And no, Gus, you just beat out Andre. You just beat out Andre. Gus Mortson, are you here? You have to be here to collect. You have to be here to collect. Gus Mortson, are you here? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Gus, don't do it. Oh, there he is. He made it just in time. Just as I was about to hit the wheel, which I just did for another one. So we'll go double header on the end of the week today. And we got someone new in the house. Gregory Burris. I don't believe I have seen Gregory's name on the wheel before. That is awesome. Gregory, are you here? Gregory Burris, are you here? Gregory? Don't do it to me, man. Don't do it to me. Are you here? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Gregory, you're going to make me spin the wheel again. Oh, man, Gregory. I wanted to give you some swag, man, but we got to move on. A little more drum beat. All right, here we go. Oh, you got to be kidding me. Oh, my God, there is no way. There is no way. I don't know how many people are on here. 80, something like that, probably. How is that even possible? And no, it is not rigged. Boy, Gregory, when you find out that your name, that your spin the wheel came up here twice. Oh, now you're there. Now you're there, Gregory. What happened the first time? That is unbelievable. You know what? I was literally just about to spin it again. Gregory, I'm going to take your name off it. You did win. You did win. Okay, and let's get it one more time. Gene Monaco, are you here? I think you won last week, Gene. Didn't you? Did you win last week? And it's okay if you did. It is okay. Motown guy, you probably didn't get your name in on time. I don't run the wheel here. I just spin it. Gene Monaco again. All right. So, we've got the 3 G's today. Gus, Gregory, and Gene. Gus, Gregory, and Gene. All right. I put this up here before. Let me put it up here again. Send me an email with your name, mailing address. Oh, look. Boy, you just want to extend this on. Gene, are you sure about that? Do we want to offer this to someone else? Hang on, everybody. Hang on. If Gene is being that guy, Gene is being the guy that you want to go have a drink with. If he is being so gracious to sit this one out, we got to go one more time. Are you sure, Gene? Wow. You are the man, Gene. Okay. Okay. You know what? That's good karma. That is really, really good karma. I love it. All right, here we go. Bitcoin, by the way, just hit 77,000. Oh my goodness. You gotta be kidding me. Are you here again, Zora? Zora, are you still in the house? Yay or nay? Do we have Zora in the house? Yes, you are. All right. Everybody, shoot me an email, the winners. You know what to do. Lastly, does anybody want a copy of today's, what we did here? Let me post it back up here. Does anybody want a copy of this? Exactly, Motown guy. You didn't get your name up there quick enough. I know we posted this up here earlier. Let me post it again in case anybody does want a copy of this. Let me get, there it is. And you can download that right there with that bit.ly link. It's called there, guys. And as always, you can always go to our website. You can always go to the YouTube, Prosper Trading YouTube, and watch all of the Market Mind segments that we do. All right. So I just posted that in here again. The bit.ly, if anybody wants it. It is all good. It's yours. I hope you guys have a fantastic weekend. One last thing. The markets are open on Monday, Veterans Day. The bond market is closed. Okay? The bond market is closed. Stock market is open. We will be here. Okay? We will. Yeah, Leif, that's right. Click that like button. Let's get it going here. Should you sell your Bitcoin? I don't know. Are you trading it or are you holding it? All-time high, 77,000. Buddha bonds, stocks rule. Bobby, I love it. I love it. Yeah, Mike Shore, special guest. Mike Shore in the house on Monday, guys. Mike Shore in the house on Monday. Thanks, everybody. Have a great, great weekend. Really appreciate all of you.